trading versus investing in stocks like Tortoise Acquisition Corp and GNUS Brands International. Trading versus investing. Let's break down a quick story about two traders trying to make money in the stock market as quick as possible. If you're looking to make money as fast as possible, then click that like button. So let's break it down. On the left, we have Mr. 20%. He's a trader that shoots for 20% returns each time he trades a stock. On the right, we have Mr. 50%. He's a trader that shoots for 50% returns every time he trades a stock. Mr. 20% and Mr. 50% each start with a round number of $1,000. Unfortunately, their first trades for the day are in the red. For Mr. 20%, he lost 20% on his trade, and Mr. 50% lost 50% for his trade. Not a good start. Mr. 20% has $800 left in his bankroll, and Mr. 50% has $500 prior to moving on to the next trade. Time goes by and they both find their next best trade and they both hit. Mr. 20% made 20%, of course, and Mr. 50% made 50% on his next trade. Mr. 20% has $960 in his account, and Mr. 50% has $750 going into finding his next trade. If we let this scenario play out, losing followed by winning for a couple more trades, you see what happens to each bankroll as time goes by. My goal is to not highlight the unique scenario of losing and then winning back to back trades, because I know a lot of subscribers following this channel are on the winning side much more than the losing side, since you know what you're doing. But my goal is to show one scenario of what happens when you lose money in the stock market over and over again. This is primarily why Warren Buffett's number one rule to investing is never lose money. You actually need to gain much more money than you lose just to get back to even. Sure, trading is exciting and there's a thrill to finding hype stocks like Tortoise Acquisition Corp, SHLL stock, or GNUS Brands International, GNUS. I call them hype stocks because look at how many views those two episodes received on this channel. Both of those episodes are nearing over 10,000 views, mainly because there's a lot of hype surrounding those names at this time. If you've been following the channel, you know that I've been documenting the journey of growing one of my stock portfolios from zero to infinity with 10 plus years of investing experience. There's no limit to how high the portfolio will go. If you're new, welcome to Mr. Zero to Infinity for episode 50. We sure are moving along from starting at that zero number back in the beginning of 2020. If you're growing your stock portfolio to infinity or as high as possible, then click that like button and feel free to subscribe and join the community. Sounds like we're all on the same mission of building wealth in the stock market. Almost 500 new subscribers joined the channel since the last episode. That's awesome. Thanks for all the support growing the channel. So for episode 50, I primarily wanted to go over a few of my personal thoughts about trading versus investing, and I'll go over a few points about hype stocks like SHLL stock and GNUS stock compared to the growth stocks that I've been buying each episode in my stock portfolio. Anyone that's watched all of my episodes from episode 1 to this episode, episode 50, already knows I have yet to sell any of my stocks up to this point that I took this screenshot, since I would consider myself a long-term investor after learning quite a few lessons about the day trading world when I was a teenager 10 plus years ago. Before I discuss my personal thoughts of trading versus investing, remember that I'm not a financial advisor and this video is for entertainment purposes only. Always do your own research when buying and selling securities and never rely on any of my information. I have different goals from you and you have different goals from me. That's the great thing about trading or investing in the stock market. Everyone on this planet has their own unique way of multiplying their money. So let's get started. This episode will be more of a podcast with not too many visuals, so sit back, relax, and enjoy. Trading. You know I follow trends on a regular basis, and if you haven't noticed, there's a big wave of day traders trying to get rich buying and selling stocks. When I first learned about the stock market, there were $8 to $10 trading fees per lot of shares bought of any stock. Now, with apps like Robinhood, there are $0 trading fees, which means there's no longer a substantial barrier to entry to participate in trading or investing in the stock market here in the United States. I must say, the trading world is a fun place for entertainment, especially since sports aren't on TV. You hear about a stock symbol somewhere on social media and you deploy $100, $1,000, $10,000. You tell me how many zeros would you like me to add? Everyone has their own unique bankroll and risk tolerance to participate in trading stocks. So, with whatever bankroll you have, you stumble upon a stock called Tortoise Acquisition Corp, symbol SHLL, which you heard may be the next Nikola stock, or you hear about a stock called GNUS Brands International, symbol GNUS, and you found out that Arnold Schwarzenegger is a significant investor. You are seeing these stocks go up in price per share, and you don't want to miss out. You heard the term FOMO before, fear of missing out. Without completing any research outside of finding a lot of people talking online that these stocks are going to $100, you move forward, buy some shares, and watch the stock move up, down, and sideways all day and all week. Did you have a goal in mind? Do you have a time horizon of when to get out? Are you short-term trading the stock, or are you investing long-term, willing to wait years before selling the stock? Those are just a few very important questions I see a lot of beginners not ask themselves prior to entering the stock market. They are buying a ticker on the screen, and if you didn't know this, most mobile trading apps are designed to entice people to trade rather than invest. Look, I get it. Once you fall in the rabbit hole of day trading, it's fun and exciting when you're making money and your account is growing. Unfortunately, if you do the research online, you'll learn that most traders are not successful over a long period of time. One of the main reasons, in my opinion, is the fact that a lot of traders don't follow a specific strategy and stick with it. A lot of new traders don't know how to limit their downside risk. There's no game plan. Trading is a constant hunt for the next best trade, and without proper portfolio management, you may end up like Mr. 50%, who started with $1,000 and is now left with around $210 in their Robinhood account. Without a system in place, you may run into a losing stock that crashes and loses you money. For me, in my perspective, I understand the thrill of trading stocks. I don't day trade, but I will allocate a small percentage of my portfolio towards a short-term trend that I'm seeing and researched. If it matches my risk tolerance, I'll then decide what percentage of the portfolio I'm willing to put towards the stock. I'll usually write down my overall goal and my expected time horizon with any sort of short-term trend I'm seeing. No one's perfect, and sometimes what we think may happen doesn't always go to plan. That's why I primarily focus on long-term growth stocks that I'm willing to wait years to get the big returns. To end my thoughts about trading, I think it's one of the best ways to learn about the stock market for anyone young and that has interest in making money. There's a big difference between paper trading versus having skin in the game and having a couple dollars or hundreds of dollars going up, down, and sideways. Everyone starts at $0 and needs to understand that the stock market is always moving. If you can't handle a stock portfolio dropping hundreds of dollars, how will you ever build up your tolerance to handle drops of thousands or even millions one day? My big warning to anyone young and getting their feet wet with trading right now, always know that there is risk involved and odds are not in your favor when it comes to making big returns over a long period of time. Percentages eventually average out, and I've seen a lot of people lose money day trading. It's a full-time job, especially if you're trading a speculative hype stock that's moving up and down 20+% in minutes. That type of trading is too risky for me since price movement is strictly based on headline news and market volume. For that reason, I personally allocate a large percentage of my stock portfolios towards long-term investments. I'm a believer that there's no better time to invest in the stock market than right now. That goes for any type of market we're in. Bull market or bear market, it doesn't matter. I started this stock portfolio at $0 earlier in the year, and now you see that value is a little over $7,700 at the time I took this screenshot. While others were fearful during the stock market crash, I was buying more and more stock. In my opinion, depending on the stock, the best time to build up a position is when a stock is going down. The main reason is because I get to lower my cost basis lower and lower. I only use this strategy if I have a strong bull thesis long term. Looking at your screen, the first stock I added to the portfolio was Fiverr stock because I had a bull thesis on the gig economy and thought Fiverr would perform better than most stocks in the event a recession was to hit. Feel free to check out my earlier episodes covering more thoughts on Fiverr, since that's one of the best performing stocks in the portfolio at this time. My Fiverr position is up over 150+%, which is my goal for all of my holdings. As a long-term investor, I'm not looking for small returns. Since I'm young at 29 years old, I could take on a lot more risk compared to someone that's in their 60s or 70s. Each month that goes by, I plan on depositing more and more cash depending on my savings rate each month. This is the main reason I don't buy a big lot of shares at one price. As time goes by, depending on what I'm seeing in the current stock market, I'll add shares to all 7 stocks in the portfolio. As discussed, I have a unique cost basis compared to someone looking to buy their first couple of shares of Fiverr, which was around $74 when I took this screenshot. I'm playing with the house's money on my Fiverr stock position, which opens up my playbook considerably when I research other stocks to add to the portfolio. For anyone following along from last episode, you'll notice I did add one more share of Shift4 Payments stock. Thoughts, opinions, and commentary on my other stocks have been documented in past episodes. Before I end this episode, I wanted to highlight one more thing about time and compound interest. Over the years, I learned that people focus on an event rather than focusing on the process. For example, since I'm a sports fan, when a team wins a championship, fans focus on the event, or in this case, the trophy, once an event occurs. People look past the process of what the team was doing each and every day to reach their goal of winning the championship. Looking at my stock portfolio, I know many people key on the event, which in this case is the stock portfolio value of a little over $7,700. My suggestion to anyone that's listening is to focus on the day-to-day process of researching companies when building your own stock portfolio at your own pace. Some people may think $0 to a little over $7,700 is a big jump. For me, I'm just getting started, and in my opinion, this is still a very small portfolio, especially when I look back 10 plus years from today. That's why I referenced in much earlier episodes that the portfolio is still in the beginner stage, trying to break 5 figures or $10,000. It will get there, and I'm in no rush, so I'm enjoying the process of making these episodes, all 50 episodes up to this point, and I'm excited to work on the next 50 episodes. It will be interesting to see what stock value the portfolio hits when the channel hits 100 videos. Any guesses? Let's end it there. Play the music. Maybe I didn't earn your subscription with this episode, but there's always next episode. It's free to subscribe, and a couple of my favorite comments from last episode are on your screen. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios. All my episodes are meant to be watched in order, since the stock market is always changing and there are always new trends to be found as the weeks tick forward. Instagram is Mr. Zero to Infinity. Thanks again for watching. Let's keep building from zero to infinity. You got this. As always, this episode is not intended as investment advice. Do your own research prior to making any investments and do your own fact checking. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment purposes only. Never rely on any of my information when making investment decisions. Peace.